Hi traders, this is Matt Krupski here at Chartered Financial Services with your weekly options beat here on Tuesday, March the 28th. This week we're looking at options in the grains because we have a big report coming out this Friday. The annual anticipated acreage report coming out could see some big moves in the grains. And as always, options are a great way to hedge yourself or to get, a limited risk or a known risk exposure in the grains. If you're buying options, you know your risk going in. Most you can lose is what you pay for your option. And generally, you have some unlimited upside potential or downside if you want to protect to the downside. So options are a great way to hedge yourself or gain that exposure you're looking for. And the nice thing about options in the grain market these days is that over the last couple years, they've really expanded your option on options, so to speak. Back in the day, I sound like an old guy here, but back in the day when I first started, they had options on basically what are now referred to as more standard options. So you had May options on, May futures. You had July options on July futures, across the grains. They traded basically on that contract, expired into that future. So May options expired into the May future and that type of thing. But as everyone knows out there, the tricky things about grains is you have your old crop and your new crop. The basis can change between your old crop and your new crop. So recently, within the last year or two, the CME has offered what they call short-dated new crop options. For instance, in soybeans, you have your new crop, which would be November soybeans. November 2017 would be the crop that's going to go into the ground soon here. And that price can change, be more affected by weather, more affected by growing conditions, that type of thing. And so you can see the basis between the existing crop, what's already come out of the ground, which is, the May futures are considered existing crop, the stuff that's already in storage, versus what's coming out in November. So we can see that change. What the CME did was they listed what they call short-dated new crop options. So these options are based on the price of the new crop future. So for beans, that's November. For corn, that's December. But they're short-dated, or what I think should be a better term is shorter dated. So you can buy options based on the new crop prices that expire in May, that expire in July, that expire in September. And they expire at the same kind of times as the old crop prices, but they're based on the new crop prices. So that's one way you can hedge yourself or get exposure going into this report if you're more concerned about new crop prices rather than old crop prices. Now, the other thing they've recently listed are weekly options. Mostly on this channel, we talk about weekly options, stuff that's expiring soon. Well, they actually list those in the grains these days. So we have options that are, interestingly enough, coming off this Friday. Now, just to refresh your memory there, the value of an option is determined by many things, one of which is time to expiration. The more time to expiration, the more expensive your option. So if you're looking for an option to hedge yourself or to get exposure and you're trying to buy, November options, that's going to be pretty expensive, a November at the money option, because you have a lot of time to be right. If you're looking for an option that expires this Friday, there's not very much time to be right. So that's going to be much more inexpensive. So traders who are interested and concerned about what this report's going to say, what the acreage number is going to come out, may consider buying either options that expire this Friday, or they also list options that expire next Friday. Like I said, they're weekly options, so you can pick your week you want them to expire, essentially between now and the next 4 weeks. They list all of those at once, and that'll give you a more inexpensive way to either hedge yourself or to gain some sort of speculative exposure, either up or downside in these options. And then with all these options that they now list, it also offers a lot of different spreading we can do. You can, sell new crop, short-dated new crop options, buy old crop options to trade calendar spreads. They list calendar spread options, but they're not very liquid, so I would steer you away from those. But you can kind of construct your own given all the different options that are now available from the CME. So if you'd like to talk about maybe strategies specific to what you're thinking going into this report, I'd love to hear from you. Give me a call, shoot me an email. I'd love to talk to you about your situation, and we could come up with ways that would give you the exposure you're looking for. And as always, remember that these are my thoughts, not those of ADM Investor Services, or Chartered Financial Services. Thanks, and have a great day.